So this is the Q2 officially. This is actually a second video with the outlook. So with the calendar first, Monday, Tuesday were quiet because we're preparing for Wednesday to be a big day, CPI and FOMC. So because we have two big newses together, I'm just gonna avoid trading this all together. It's just so much easier to avoid all the stress. At least the good thing is the both disruptive news events are together, so I could just sit this one day out of the week and just look for good setups on other days if I can. Okay, yes, you have ECB, but that doesn't really, you know, sometimes it can get it to move a lot, but it doesn't normally, to be honest. And if it's a swing, then, we can get away with that. But, this is just rough estimate. We still have to have the price elements present that I look for. I need to have a drawn liquidity that I'm going to be able to use to form a bias for my trade. So, moving on to the chart. This is where the juice or the bread and butter is. So look at the monthly quarterly shift. So look at the first quarter, right? We went into a premium. And we know quarterly shift theory suggests that every quarter there's going to be a market shift, okay? So for example, take this January. So these four quarters of last year, 2023. You got a bearish move into the fair value gap, then a discount move into it, and then a reversal. And same here, just a much more deeper retracement. And to close the year off, you had a shift lower. So the general theory goes as such that there is going to be a shift into the opposite direction for the counterparty liquidity to be engaged every 3 months, so every quarter. Keeping that in mind, if you go with the quarter of this, we had a deep premium run up here into the monthly fair value gap. We closed up here for the quarter. I think we can still address this, and then as per the theory, we can then look for lower prices, so more risk off, okay? Risk on, because the dollar lower, everything else higher. But before the risk on, I think we might see some risk offness in the market by aiming at this leftover SIBI here. Unless we can completely overlap that in terms of body closure, then we may look at this area and this area. But for now, my eyes are just on this SIBI. This is the drawn liquidity overall in a nutshell. Okay, now if we just drop down to a weekly chart here, you can see last week was it wasn't like movement towards the objective here where the monthly fair value gap ends, but it did try. We went lower into a discount, boom, expanded higher. Okay, yes, you did close way off of that fair value gap, which is a good indication. Just above this CE, I think. So that is what I want to see. Now for this week, I'm going to be looking at this high here. So previous weekly high. And then there's a daily CB here and the monthly fair value gap that I'm aiming for. Okay, but with the CPI and that FOMC, this could change, okay? This could drastically change. So I'm going to present two scenarios in this one, okay? Because again, this is something where I need to just kind of wait and see because of some functions happening as well. I'm going to have enough time behind the charts as I do normally, so I'm just going to only go with my highest probability setups and just leave everything else out. So the key scenario that I'd be looking for is this, okay? You have a weekly order block here. Okay, that can be a factor. Okay, for price to move up. This magnet, by the way, is the drawn liquidity. But let's come back to the topic. So weekly order block here. This is the key objective, right? This is the key area where it can move. Let's just get rid of that. Don't need that volume imbalance already used. So, but for us to go up, meaningful counterparty on the bearish side needs to be engaged. That's where this daily order block can come in. And your last line of defense for bullishness is bodies staying inside of this BISI. Any body that's closed below the mean threshold would indicate some kind of, waiting on my part if we close below the weekly BISI, sorry. Okay, so the order block on the daily and the BISI together are my two, and maybe this inversion here as well. Yeah, these three are my areas of where I don't want to see price close below, so that makes this high resistance area, which makes a raid here more easier. Okay, that's the first scenario. Second scenario is if you open and just go straight into this and complete this bullish, this fair value gap premium, then I would just have to wait. If you open up straight away and just complete this, then that's doubtful. I'm gonna have to wait on more price action to come out, because then we could be 50-50. We could then go higher here, or do nothing. You know, just chop and wait for next week to do something else. So, or come lower. So this is what I'm thinking. So that's the bulk of the work done here. Okay. Now with the euro, everything I've said is just, you know, mirror image basically. So if you're looking at the high of this fair value gap, then we'd be looking at this really tiny but meaningful gap here. The high is 945, low is 949. So there's like a 0.03 pip difference, but you know, that's a difference whatsoever. That's a difference still, okay? And don't forget DXY leads this, not the other way around, okay? So if DXY is going to go up there to fill this, then this is going to have to come with it, okay? So whether it likes it or not. And yes, you have some key areas here. You have the 4-hour fair value gap here. And I'm looking for a discount support here, so here that will be a premium support. We already have early signatures of that with a strong rejection of this inversion, normal fair value gap, order block. You know, we have a lot of resistance in this area, and price has respected that. Okay. So what I want to see now is, you know, this mean threshold, and again this area, if it can act as a resistance again. And if it does, then can we go below here into this SIBI? Sorry, BISI, I keep saying SIBI. And then this area that I'm looking up would actually be this previous weekly low, or monthly low, I guess. Oh no, it's weekly still. Okay, yes, weekly low, and this 4-hour fair value gap. Maybe here. Okay, maybe we can push here, because remember there's an SMT here as well. This has pierced the highs. This is not. This is yet to pierce the low. So again, if you open up and go straight into the discount area without doing anything, then I'll be doubtful. Then I'll have to wait for more information. But if you just go up here towards the counterparty side, most likely not do much on Monday and Tuesday, like no big moves. Wait for Wednesday and boom, it explodes with the news and just hits the discount targets. Then yes, that's something to look forward to. Maybe in a swing ID I could enter on Tuesday evening with a large stop loss, anticipating CPI, obviously lower the risk down significantly, and then hopefully being able to take first partial before CPI and get paid, and then let CPI do its thing. So that's the rough plan for my swing trade for now. As for intraday, I'm on standby till Wednesday evening after all the news is gone. And that's everything.